The Bank of Canada is expected to raise their key interest rate. How high will they raise it? What are the potential outcomes? And what should you be doing to prepare? Stay tuned to this video for answers to all of those questions.
This is the Saskatchewan Real Estate Podcast, the show that highlights Saskatchewan real estate. Looking to buy your first house, your next investment property? Subscribe to never miss an episode. Here's your host, Ron Quaroni.
Welcome back to the Saskatchewan Real Estate Podcast. I'm your host and Saskatchewan mortgage professional, Ron Quaroni. Each and every week on the show, we touch on a different aspect of Saskatchewan real estate. If you're a first-time home buyer, or maybe someone looking to upgrade properties, this is perfect information for you. To never miss any of this valuable information, hit the subscribe button. So, for sake of relevancy, today's date is September 4th, 2022. The upcoming Bank of Canada meeting is on September 7th. This is the meeting where they determine whether they should increase, decrease, or keep their key interest rate the same. Even though we're specifically talking about the upcoming September 7th meeting, this information is still pertinent to future Bank of Canada increases, decreases, or no changes at all. All right, so let's start with some backstory. 2022 has been an absolute wild ride when we're talking about the Bank of Canada and their key interest rate. The bank took everyone by surprise by being very aggressive with their rate hikes. Starting in March, the Bank of Canada increased their key interest rate by 2.25%, and they ended their last meeting with an absolute whale of an increase of 1%. This has changed the mortgage landscape in Canada, most specifically for variable rate mortgage holders, but it also has deeper effects in the larger economy as well. Things like credit cards and line of credit are affected by this key interest rate. So the big question is, will the Bank of Canada increase again at their next meeting? So when the Bank of Canada meets, they really only have three options. One, they could increase the rate. And at this stage of the game, it could be anywhere from 0.25% all the way up to a full percentage point. Second, they hold the rate where it is. And third, they decrease the rate. So here it is, my prediction, and I'm going to keep it kind of broad, but I'm going to say the Bank of Canada is going for a moderate increase, anywhere from 0.25% to 0.75%. I don't think we're going to get a full percentage increase like we did at the last meeting. This is due to the inflation data. The latest data that we got shows that there was a slight reduction in the overall inflation amount. The inflation data, as well as a slowing economy, I think the Bank of Canada is going to be a little more hesitant before dropping another 1% increase on us. That being said, inflation is still well above the Bank of Canada's 2% target, so it's not likely we're going to see no rate increase or a rate decrease. Let's touch on a few of the potential outcomes or consequences of a rate increase or a decrease. An increase in the bank's key interest rate is going to hurt consumer spending because credit is going to become more expensive for them to use. The more the Bank of Canada increases this key interest rate, the more it costs borrowers to borrow money. This helps with the demand side of inflation, but ultimately it's going to slow down the economy. Next, if the Bank of Canada held their rate steady, over a period of time, we would be able to see if the current key interest rate is stimulative or depressive. We really can't tell over such a short period of time if the current key interest rate is going to hold steady and whether it's going to keep boosting the economy or whether it's going to keep pushing the economy down. And lastly, if the Bank of Canada decreases their key interest rate, borrowers will once again have access to cheaper credit, which means more spending. This would increase the demand side of inflation, but could also be good for the economy as more spending helps it grow. So if we're talking from a mortgage standpoint, what you should be doing in your personal situation, let me quickly map out a few scenarios for you. If you are in a variable rate mortgage, this last year has quite frankly sucked. All of the people who always told you should be in a fixed rate mortgage are, at least for 2022, right. We've seen major fluctuation in the rate, but it's also time to remember why we chose a variable rate in the beginning. Variable rate mortgages have much better prepayment penalties, so it still might make sense to hold on to that variable rate. If you are looking for a little peace of mind and you don't want to experience any more fluctuation in these rates, I'd say it's a really good idea to reach out to your existing lender and see what your lock-in rate for the fixed rate side is. If it's not too high, or if you're comfortable with that monthly payment, you might want to explore that option. Or if you have the stomach for a little fluctuation, there is a good chance as we enter in the next couple of years that we could see the fixed rates head down, and you might have another opportunity to lock in at a lower rate. Fixed rate mortgage holders, you are sitting back and relaxing because your rate is not affected by the Bank of Canada's key interest rate going up or down. You really only have to concern yourself when it's time for you to renew your mortgage, and then you have to decide whether you should be going variable or fixed. Now, the biggest benefit of a fixed rate mortgage is you have consistency. The payment stays the same throughout the whole term, but keep in mind with the fixed rate is to watch out for prepayment penalties and to be very careful to not exit your term early. For both fixed rate and variable rate mortgage holders, I think now more than ever, it's time for you to really evaluate your home situation, cut costs where you can, and really hold on for the ride and survive this turbulent time in the mortgage market. If you are finding that you can't afford those mortgage payments, it's time to evaluate your situation. If you find you absolutely cannot afford those monthly payments anymore, it might be time to consider a refinance to extend your amortization. This will lower your monthly payment, but of course, anytime you extend your amortization again, it's going to cost you more in interest over the long term. But if this is the option that allows you to stay in your home, it's definitely something to explore. Lastly, if you are a prospective home buyer, these rate increases directly affect how much money you can borrow from the bank if you are using a variable rate mortgage to get pre-approved. Because all mortgage rates exceed 3.25%, we no longer use the Bank of Canada stress test rate of 5.25%. Everyone is being stress tested at their contract rate plus 2%. Any increase in the Bank of Canada's key interest rate will once again limit the amount of maximum mortgage you can qualify for. For example, if you were a borrower with an income of $100,000 using a variable rate of 3.8%, you would have a maximum mortgage amount of just over $435,000. If rates increased 1%, your max purchase price would drop to just over $397,000, a loss of buying power of around $38,000. If you are hoping to buy a property at your maximum mortgage amount, this next increase will diminish the amount of mortgage you can get. It's really important at a time like this to know your numbers, and the best way to know your numbers when you're going through the home buying process is to get pre-approved. It's free, it's painless, it's very easy, and can allow you to enter the home buying process from a position of strength. If you are looking for a free mortgage consultation, I've left a link to my website in the show notes. There you can find a contact page. If you go to the contact page, there's a link on the bottom that says book a free consultation with me. I'm always happy to share my time and see if I can help you get prepared for the home buying process. Just before we wrap things up here, I want you to know that this video is totally based on my personal opinion. I'm not an economist. I don't exactly know what's going to happen with the key interest rate. These are just my thoughts and takes. Please do your own research and consult with the proper professionals to come up with a solution that best suits your personal needs. Thanks so much for checking out this episode of the Saskatchewan Real Estate Podcast. I really hope you've enjoyed the episode. If you did, please do me a favor. Go and check out some more of the great content that we've created here to help you better understand real estate, the Saskatchewan market, and of course, these bigger macroeconomic pictures of what's happening with Canadian real estate. Until next week, my name is Ron Quaroni, your Saskatchewan mortgage professional. Bye for now.